Welcome back. Well, let's shift focus to the world of currency and commodities. And Manisha Gupta, as always, joins us with a roundup. Good morning, Manisha.
Hi, morning, and thank you for that. Well, we have started very strong when it comes to the U.S. dollar, and that seems to be putting pressure on everything else. So last week, we saw gold prices decline by 3.5%. It's trading at a 3-month low, and it's the biggest weekly decline in many, many years. The pressure also has been seen in silver. The money really seems to be shifting to U.S. dollar as a better currency, and also in the global equity market. So there is no safe haven buying, and there has been a very sharp correction, not just in gold, but silver prices also declined more than 6% in the previous week. The crude oil prices in the meanwhile seem to be taking some support. We are still trading above $62 per barrel. Friday was a good day. We saw almost 1.5% of gains come in. And this week as well, we've started positive because the U.S. and China trade talks is providing a lot of optimism into the markets. The U.S. rig count has declined for a third straight week. The markets also are looking at the OPEC meeting in the month of December, and OPEC statement saying that 2020 is going to be a better, brighter year in sense of demand. So these are the factors which have been supportive. A quick word on the metal prices, which also have started slightly on a better note because of the Chinese data expectation that we could be looking at further stimulus from there. So the core commodities really seem to be doing well.
Okay, all right, Manisha, thanks so much for that. Well, let's tell you about the derivatives action then. In Friday's trading session, the Nifty entered the low point of the day, but there was no massive build-up in terms of the Nifty futures. So that appeared that there was some unwinding of some positions. In terms of the Nifty Bank, that was relatively stronger, and there was some buying on the Nifty Bank. And in fact, we did see that the Nifty Bank ended in the green while the Nifty did end in the red. Now, in terms of the PCR, that's a put-call ratio, out there we saw a big interest build-up on the call side. Now, that's why the PCR came down to around 1.26 from more than 1.4 odd. And there were a couple of strikes that were getting written. So the 12,000 call, the 12,100 call, between them, they added nearly around 21 lakh shares, telling you that the bears, they believe that they can defend that 12,050, 12,150 odd mark. On the downside, the 12,000 put, that was seeing some open interest built up as the market scaled higher. But then, in fact, when the markets crumbled, we did see unwinding of positions out there as well. We already told you earlier that, in fact, the FIs, they have been backing up this market. They bought more than 900 crores. The DIs, though, they have been selling a tad bit. In the FNO market, though, the FIs are net short because 55% of their positions are on the short side. Though in terms of option data, they were quite active. They bought some calls as well as puts, but they bought close to around 2 puts for every 1 call. So if in case things go wrong, then they have some cushion on the put side. That's why they have been buying some puts, but they're not expecting a big downtick, it appears, on the markets because they've been writing puts consistently. Even in Friday's trading session, they added close to around 10,000 put contracts odd. The crucial level, Anisha, is Friday's high. That's around 12,034. That will be the crucial resistance level. The bulls would like to get way past that level to build on there.
Okay, let's see whether we get past that level or not. It looks like the SGX Nifty is suggesting we might start on the back foot. But with that, it's the end of this edition of Power Breakfast. Our morning call comes up next.